Welcome back everyone to the 2024 update of my Robinhood portfolio. This is kind of a year in review of how my portfolio did, what stocks and ETFs I'm holding, and what the portfolio is valued at currently. So as you can see, we are now up to $133,568, and most of all this growth has a lot to do with the pretty crazy growth we've had this year for the stock market in general. The S&P 500 this year is up 25.4%, with my own portfolio gaining just under 39%, which meets our yearly goal of beating the S&P 500 by at least 5 percentage points. At one point, the portfolio got to over 140,000, but we did have a recent pullback after the Fed meeting a couple days ago, which brought us back down about $7,000 from that high. And since the last update, there has been quite a few changes in the portfolio. So with that being said, let's jump right into number one, which is Nvidia, still at the top, making up about 13% of the portfolio, with a total gain of around 26%. Now, as you probably know, Nvidia has kind of flattened out over the past 6 weeks or so. As you can see, it's down 7% this month. So going forward, I'll actually be buying a few shares here and there to hold for the next 2 to 5 years. I think this is a company that will continue to slowly increase its revenues and its earnings even into the next couple of years. Which brings me to the next one, which is very similar to Nvidia. It's Broadcom, that recently jumped up to number 2 in the portfolio because it had a monster month after it reported its earnings. It jumped about 40% in the matter of a couple of days, which brought the weighting to almost 10%. So now my total gain is $7,000, or about 70% for Broadcom, and it's another one that I plan on holding for at least 2 to 5 more years. The next two I've held for years and are the two classic Magnificent 7 stocks, so I won't spend too much time on them, but it's Microsoft and Apple. Microsoft makes up about 7.5% of the portfolio with a 21% gain, or about $2,500, and Apple has a gain of about 43%, or about $3,800, and it makes up just under 7% of the portfolio. Now, despite the incredible growth that Apple has had, I've actually been selling a few shares and will slowly be selling a portion of this position throughout the next year. Not because I don't think Apple is an amazing company that will continue to grow. I just think that the growth will start to be a little bit slower into the next few years, and I think there are other better opportunities out there. Which takes me to VIST, or Vista Energy, which is probably one of the most recent purchases that I've made. So it makes up about 4.5%, and I plan on averaging even more into this position over the next few months. So this is an oil and gas company with locations in Mexico and Argentina, so it's a Latin America company. And its IPO was only about 5 years ago, but since then it's had some pretty incredible growth. But even then, I still think it's a fairly undervalued stock. Last I checked, its forward PE ratio was under 10. And its price also recently dropped back down to about what I bought it at. So my total return is flat. And like I mentioned, I will be buying a lot more shares going into the next couple of months and holding for a good long while. The next two I've also talked about a lot, just very classic holdings in my portfolio that I've owned for years. So again, I will just be brief with these. It's Arthur J. Gallagher, AJG, an insurance company making up about 4.4% of the portfolio with a 13% return. Then there's Cintas, that recently dropped pretty significantly after their most recent earnings call, so I've been buying some shares of Cintas as well, and I'm actually only planning on holding this position for just a few more months and kind of seeing what it does and possibly selling some shares to move into other positions. Next, we have Google making up just under 4% of the portfolio as well. Just another really solid mega cap Mag 7 stock that just doesn't seem like it's slowing down anytime soon. So my return is 31%. Also, if it seems like my returns on these stocks are lower than they should be, it's because I dollar cost average into basically every single stock I own. So I'm putting anywhere from $50 to $75 just about every day into these positions. This means I might buy when stocks are a little bit high, which might decrease that total percentage return. So that's just in case any of you are curious. The next one is Costco, a very powerful retail stock that I've owned for roughly 4 years now, with an 82% return and making up just over 3% of the portfolio. Then we have Arista Networks, which recently went through a stock split, and that was, I think, about 2 weeks ago. And Robinhood still hasn't figured out how to adjust my total return and my average cost. So we don't really know what my total return is on Arista Networks. So hopefully they get that fixed sometime soon. Usually Robinhood is good about adjusting the returns after a split. Typically it takes a couple of days, but like I said, it's been about 2 weeks now. Next we have Berkshire Hathaway at about a 9% return, and this is one that I do plan on holding for as long as possible. It's just a very classic Warren Buffett company, and it's basically its own ETF in a way because of how many companies it holds. And similar to the other companies that I own, it's extremely large, but still continues to scale and increase its revenues, and especially its cash pile. Warren Buffett is kind of known for hoarding a ton of cash, so definitely a cash-rich company. Going down the list, this brings us into a little bit more speculative, higher risk stocks. We have Celestica, 65 shares, and a 55.25% return, which is pretty amazing because I bought earlier this year, so a great return there. Then we have AppLovin with an even higher return at 134%. As you can see, this company just exploded this year, up nearly 800% year to date. Now, as always, guys, there are so many different holdings. We're up to about 37, so it would take way too long to go through every single one of them. But like I always do, I'm gonna scroll for you to see the rest of the holdings, and there are a couple that I did want to talk about that I believe are great buying opportunities that I'm going to be purchasing more shares of because I do think they are very undervalued. One of them being Synchrony Financial that I own 22 shares of, so about $1,500 worth. So obviously it's still a very small position because it's new, but I am planning on building it up over time. And it's funny because I feel like everyone from what I've seen was obsessed over SoFi Financial, which is kind of a competitor to Synchrony. And of course, for those of you who follow kind of the popular stocks, SoFi, I think, returned 150% this year. So both these stocks had a great year, but despite that, I do think Synchrony is a little bit better of a stock to buy and hold, especially comparing it to a stock like SoFi, but I could always be wrong. So I'm planning on building up this position and kind of seeing what the price does going forward and kind of buying accordingly. So because I didn't go through every single stock in the portfolio, let me know if anything catches your eye or if you have any questions or concerns about the portfolio, and I will see you all for the next update.